Hey, what's going on, guys? Sunday night, doing an update. I'm gonna hit on global macro, kind of what happened last week, kind of what our thoughts are heading into this week, the early part of the week. I looked at the calendar. There's really not a lot of data, not a lot of catalysts. So this is the last full week of trading before we head into kind of the holiday week to end out the month. So there's a FOMC on Wednesday, and then we kind of have the ECB the back half of the week. So we'll see. I'm not, to finish out this year, I'm not even sure what. It seems like we've kind of sailed through this whole China trade deal scare, and I mean the markets just climbed that entire wall of worry. So I don't. I think the bigger risks to the downside are going to be in 2020, and it's going to be mostly political. Um, but obviously anything can happen. So what we're going to go over is where the inflection points are and kind of how we want to play it, how we want to trade it, and then I'll hit on crypto. And this weekend I changed up some of the pricing on the courses. So in the spirit of the whole Black Friday uh, retail typical stuff, I marked down our courses 20 to 50%. So I'll go through that also. If you guys want to take advantage of that, I didn't. It doesn't. I don't discount my time, so it's nothing to do with the coaching or the prop programs. But anyway, it's pretty good deals there for some of you that maybe want to get into forex, or you're new to options and you've been wanting to pick some of that stuff up. Well, let's just start with the dollar like we normally do. So still a long-term bullish. Why don't we do it like this? I'll do this over here, and I'm going to split the screens. You guys should be able to see it. That way you'll see kind of when I break it out, there's a little bit more of that multi-duration, multi-factor feel. We can cross through the different time frames. All right. But this is kind of what I do on Sundays or Fridays. I mean, we're doing this really every day. But the yearly level, which is crazy long-term level, but we can see, I sneeze there. 2014 was pretty big. So even on a yearly level, we had all these tails, and these got these small, what we call narrow range bars. And then 2014 was when all the FX turned and the dollar really broke out. When I go to the quarterly, I'm going to kind of go fast here. Okay, this is a real money candle, 2014. That was our whole beginning of our call that dollar's in a new long-term bull market. Monthly, you can see it here. We took out the TMS, as we call it in the model, and boom, it's been bullish ever since. Now, this was a spot that kind of tripped a lot of people up, and we did a really good job of staying with it. A couple of reasons: you have the 200 here on these higher time frames. You did break the bands, but it's all relative, right? So just because you have one event, one candle, it's never one thing. It's never one thing as far as global macro markets fundamentals. It's all relative, not absolute. And then when I'll show you on the smaller time frames, basically here's the weekly, we held pi. All right, so this is what I wanted to see hold back last year, and it did. So anyway, this was the breakout, long-term bullish. This was a huge run, pullback, new high, pullback. I mean, this is just standard bull market stuff. You have some good swings in here with some good cycles. All right, but this was a pretty bearish move, no doubt. But there was a lot of people calling for a breakdown in the dollar after you came off a new high, which was crazy, which is part of the reason why we actually like the market here. And then by the time you took out these highs, it was back to bull market, right? So you held pi, that's what we call the northern hemisphere. And then ever since, it's just been higher lows. I mean, it's not been a very momentous or a move filled with a ton of energy. It's just been steady. I don't know if it's probably a combination of the carry trade in the euro. Nobody wants to hold euros. Europe, with all the risks and all, just the disaster that is Europe and the banking system. It's just been a slow leak of euros, and then what are you going to do when every other country has been cutting and going to zero on rates? So the dollar's just steadily kind of moved along. We haven't had a serious breakout, which you would expect to see. Like, had we really kind of did a hard landing on this growth slowing recession type of move we've had this year, if it was a harder, nastier spot for the U.S., the dollar probably would have really screamed like it did, or really had more of an angle like it did in 2016. But we haven't seen that. So where does things change? People want to make bearish dollars calls for a million different reasons, but I don't. There's no point until things change. So what is you're still in the uptrend. I don't get nervous about being long dollars until you would break 96 on the dollar index, and even then, this if you broke here, you would have to sit through. It'd probably be a more of a move down on the dollar than 94 would be pretty key. Not that anyone would have this. Everybody would be bearish as soon as you got through the 200. But that's pretty clear line, 96. Let's see what it is on the euro. First pivot is kind of where we failed. Let me switch this over to weekly, because since we hit on the dollar, euros is kind of the opposite. There's the weekly here. Okay, this is not exactly at the bands. The long term, again, that would be 94 in the dollar index. It's 114 now in the euro. You have the 200 up here. You have this is prior lower highs on the weekly and monthly level. This is a pivot, but it's more of an intermediate term, just because of the distance it is away from the bands. You would have to give this 114 level actually where the trend would change longer term. On a daily, we failed in front of the 200, and I've been saying, this daily cycle, as you guys know, have been pretty spot on. So it was low. We had some good covers down around 110, and this can probably cycle up again, at least halfway of the move down from the last daily cycle. So there's room to come back up here towards 111. You might even see a whole retrace back towards 111.50 area and underside of this 200. So the way to play it, we're still core short, but it's a smaller core short now that we covered. I like euro yen on the long side. We've talked about that. That had a pretty good move Friday. We'll see if we get some follow through there with the daily. That's just more of a hedge against my euro dollar short. And then you have dollar yen, which I've been playing on the short side, which is also the other side of euro yen, assuming that if the euro goes down, but not as much as the yen sells off or the yen strengthens, then we'll be long the yen on the other side. So in other words, if euro yen goes down because the yen is really strengthening, then dollar yen should sell off also. So we're short there, and we don't just blindly take the other side of the positions we have. That's just you're not going to get any performance that way. You still have to trade around the cycles in the model. You can add and reduce at certain points along the way, be lighter and heavier on those pairs trades. So here in the weekly's kind of been hanging out high. I've been saying for a while though, I like this. This is the long-term, maybe what you would call a tail line or the trend line. This whole area is kind of where I'm expecting to see maybe a lower long-term high and another bigger move like this. Still, that's early to make that call though, because we got to kind of break the 8. But I am been setting up a little bit more short dollar yen. And then with stocks being pretty high, I mean, any kind of weakness there, we'd see a little bit more strength. Now, dollar yen had a pretty good week last week, coming off again 109.5, head forward 5 days down. And so this is kind of the pivot that we want to see break there, 108. If that breaks, then you add to it, and then we'll see if we get that bigger move. That would be a pretty big global macro move. So if that happens, then there's probably a lot else going on. Maybe Aussie comes off. Maybe the dollar starts to rally again. Maybe it's a more risk-off move with stocks kind of coming back and bonds. We're going to look at bonds in a second. bonds and gold kind of made a good case for maybe they held the first long-term pivot that they were supposed to hold. Just go to them right now. 10s, 30s. We've been saying that this last week, the area that held was the first spot that maybe was a potential low for the intermediate term. It's kind of either you're going to hold here, we're going to get the bigger move. This is still a risk that you catch the underside of this 8 and then we roll into here, which would cause a lot of pain in the fixed income markets because you had a lot of people chasing late for this rally up here. And I mean, I had some of my best performance I've had in the futures market on this last move. And so there's just a lot of chasing in there. And we'll see. That's what happens when you get kind of in no man's land. We broke the bands. And oh, shoot, I hate to do this right in the middle. I need to fix my charger here. I don't want the screen to go out, guys. 1 second. Sorry. Just bear with me. Takes 2 seconds. I'll lose my mic. Okay. So when you break the bands, I mean, the level in 10s is kind of around 129.08. You broke that. So the call is maybe we get back to the 200. And that's still in the cards. We had a bottom tail. Is that more in the gold market? So we'll see. I mean, I started adding a little bit to longs on this day because we poked above that swing line. But I'm not afraid to take some pretty decent hedges on the other side of that. So when you look at like the 4 hour, the first spot I sold some ultras was, this is the 10-year chart, but right kind of here. And just look at 30s. Well, here's 30s. We've kind of gained some traction above the bands. But if we get back to here, you got to be setting some shorts, guys, against any core long. So the idea is how you play it matters. So longer term, can you start longs here in 2s or 10s or, yeah. Can you add? Sure. Can you take profit here? Yes. Can you take profit here? Yes. Can you add back here? Yes. Can you take some off here? Yes. Can you add here? Yes. So we're adding to longer term positions in 2s and 10s. I even put an ultra on one of my accounts here, just a 1 lot. And if it rallies back up, that'll be a pretty good trade. Maybe I add to it, maybe not. But if I'm long one here and we get back to like the 8 on 30s, I'll definitely short some 30s on the intermediate term against that. So, okay, if that continues to rally, then I have to make a decision. Do I take the 30s off and just let the ultras run? Or ideally, you get up there on an hourly or 2 hour, hourly or 4 hour chart, and you have a move. Let's just say, for example, you get up here, you sell some 30s, a down arrow I like to do for selling. And then you get a little bit of a move like this, right? And you drop for a point. Then I book, if you're only long 1 ultra in this example, then there's not much to take off. You're just going to ride that, right? But let's say you're long 2, you're long 5 10s. Well, if you get up to this level, I'm booking my 10s. Maybe I'm long 5, maybe I go down to long just 2. And then I'm selling some 30s against that. My 30s come off, I book my 30s, and then I add back to my 10s. That's what we mean by add and reduce. I'm not going to spend a whole lot of time on that. So kind of in no man's land, this is the point where this is what happens when you have a deeper pullback. It's a patient adding back to the long-term stuff, but also taking advantage of the intermediate term short opportunities, both intraday and on a swing trade time frame. It's the same trade in gold right now. Gold's kind of firmed up a little bit quicker. And we talked about this bottoming tail here. It was pretty strong last week. That kind of started up this whole move. The 4 hour cycle is pretty high. And Again, I think that's where we're at. I mean, it might be like that for a couple quarters where it's a slower drift back towards pi, and then we get the another big risk off move. It's that could definitely play out like that. So there's going to be a lot of back and forth. That's why I would tell you guys. I mean, join the Cycle Edge membership. It's $100 a month. I was going to build quarterly, and I just think there's enough of you that just want to be billed at $100 a month. So, people are cutting the cord on cable because how many channels are you going to watch? But what are you going to do when it comes to your finances or trading? I mean, if we're talking about where the opportunity is in bonds 12 months ago, and they had a huge rally. Gold, same thing. Now we're talking about being patient on that stuff, whether you're a longer term investor or you guys want to learn to trade this stuff, swing trade it. We're doing all that in the Cycle Edge room. And this is the kind of stuff we're going over. So if you guys want to do that, I mean, it's just click memberships here. Go to jenkinscm.com right here under Cycle Edge. You can sign up right there. All right, that'll get you in the room. That's all the real-time alerts, the analysis. Get together a couple times during the week at the open. You'll learn a lot. You'll just be plugged in. It's great coverage for the price. Most of that type of high-level trading analysis and signals and everything else is, companies and people pay a lot more for that. All right, that hits bonds, gold. We hit a little bit of FX. Let's do crypto. I'm going to actually do the trends first, and then we'll hit on the cycles. So this is BTC versus USD. This is the blow-off highs. And nice pie line here really has kind of guided this, what I would call bull market to longer term sideways to down market to now back to bull market. Most recently, price held right in front of it beautifully. But this is, here, let me draw on this. This is very similar to what I was just explaining in bonds and in the gold market. You had breakout here, which we didn't talk about where that started in bonds, but you got above pi. You had kind of a secondary breakout if you missed this first real money candle. And then it's just all been bullish. So higher lows, higher lows, higher lows, higher lows. This is a bit of a consolidation here to lower highs, forming this long-term wedge. That obviously broke on this candle with the cycles, actually, which I'll show in a second. And then when you break a level like that, it's back to the 200 and or it's back to pi. That's exactly what you got. I like this amount of buying coming off pi, and now you're pulling back inside that range. So actually, I would look to be a buyer here, guys, with this daily cycle. Daily cycle is low this week and into next week for a trade back to 10,000. All right. And then this is obviously the next high here and here, these two highs. That would change this pattern that's been in place since July. All right. If you got above there, that'd be fresh, new, higher highs. It'd be actually looking pretty bullish. And that's what I've been saying, that with this longer term cycle coming in here to December, that's what I want to see, whether or not we can. So far, we're holding where we're supposed to. If we can start to turn up and make higher highs on the other side of this December cycle, then that's going to be really bullish. That's basically going to be a new bull cycle longer term, just like we had here. This was a strong move. And then we've been in a down cycle. Now I think you're going to have another cycle December into next year. That's kind of my call. But again, you don't have the scenario build too much. We'll just trade what is. The weekly, again, all long-term bullish. You held the 200 on the weekly. I like that this cycle was up. That's basically where pi held when you were low on the weekly cycle. Did I do the daily? Daily. Monthly, there's usually not much to speak of because the charts are so young. This was the bottom. We bottomed on the monthly cycle. I wouldn't be too worried about a down monthly cycle unless we break pi and December doesn't produce shit. Then maybe you have to sit through another monthly cycle into, I don't know, that would be pretty, it's tough to see this long of a downturn and then see a whole nother one back to the lows. I think the bigger scenario is a little bit of a down cycle and then turns back up to test the old highs in the cycle. We didn't quite get to the top of the range, so sometimes you get a little bit of a pause and then you go back to the top of the range. Ether, back to the weekly. A little bit more sideways. I guess that's true for a lot of the alts. That cycle's been kind of up, but you haven't seen price really gain any ground. Pretty quiet. Daily. Very active. I think guys though that you're gonna see crypto really pick up here next year. So again, I'm still willing to do the crypto membership for those of you guys that want to get after it and participate and put together a group. And you know, this year's been kind of slow, but I think it's going to pick back up. So I'm going to have that membership also. It's going to be the same thing here in the Symphony room, right? And so you can collaborate. We can work on the signals and trades, get together videos, all that stuff. So that'll be that membership. But yeah, don't forget about that. So I see this pretty quiet. This is really tight base. So maybe we, again, coming in December, maybe we can actually start to base and start to make higher highs. That would be really technically bullish and again, line up perfectly with the longer term cycle of Litecoin. Same thing, just nothing but pattern of lower highs. So intermediate term, let's get above pi, let's get above this high, and then you kind of have clear sailing back to these levels. So how do you play it? I mean, I've talked about when you go from here to 140, which we were a seller, and then you start to pull back here. This is go from 140 to 50, guys. You want to be a buyer. You want to start nibbling longer term. Doesn't mean you get heavy. You don't want to get heavy until you put intermediate term terms back up, because what if you go to 30 and then you're heavy, you're going to be out half your capital. But these are nibbles down here back at 50. You want to start accumulating longer term position again. All right. Let's see. What else do I want to do? I guess that's all I want to hit on the majors. Cardano, same thing, quiet. I can't remember what I was trading. Accounts we were trading. So we had some nice sales up at 10 cents. Guess what? You got cut in half. You're back to 4 or 5 cents. You want to be accumulating again. So I've been pretty patient, kind of waiting here into December, but I think I'm going to front run that a little bit. Start to add back to some of these names. So I'll be putting that in the crypto room when we kind of do that with the model. This is a long video. Neo actually, I saw on the relative value base, Neo is actually one of the strongest lately. So obviously with this move, I don't know the news, but this is what I want to see the alts do, and like I just talked about on Ether and Litecoin, but it's already happened here on Neo. So now you've made a higher high. You want to be a better buyer, and you want to be more active on the long side of that coin. You say go, same tight range. Monero, still making a series of lower highs, can't get above pi. Classic, nothing but lower highs. I'll do some more alts, guys, on a different video this week. So, okay, let's just hit on the cycles and then that'll be that. So again, let me just clean this up. We've got a couple longer term cycles here that I have on the chart, so it gets a little bit noisy. But this shorter cycle was doing a really good job. And it's kind of actually quickened now when I look at like here, see we had highs here, highs, lows, highs, lows, highs. Sped up a little bit now. This kind of bottomed before we bottomed here, but it was again there's pi, and then we peaked a little bit in front of this wave. So that's kind of it's shortened. Looks like it's shortened a little bit. So we might be on a low, like I talked about. This daily cycle is really low. That's why I kind of like probably add a little bit here this week. And this cycle should be maybe be a little bit more forward. You shorten that duration. If it sometimes the cycles will speed up, sometimes they kind of elongate out, just like any type of wave formation does. Anyway, we'll see. Still everything bullish, but again, this is the main. We've talked about this for a long, long time. Ever since we made highs here with this turn, and then the longer term wave is just really setting up nicely. You know, I'm not big into making the calls like we're going 100,000. We'll be at new highs by 2020. But if you just use the longer term wave, that's at least something that you could. There's some substance behind a cycle versus just making a grandiose call because you feel like it. So we made a high on that cycle. Okay. Then we made a low, basically. That we did base here in time. You just didn't get a new high with the turn up in this cycle here when the cycle turned back up. So these are turning points. These aren't highs and lows necessarily, they're turning points in time. So if you get a low, but then it fails to produce a new high, and what happened? We broke. So what did that mean? That means for this entire cycle, you're not going to get no shot for a new bull market until after this. Guess what happened? That's called cycle inversion. You based with the cycle up, can't on this side. This should be starting a new move. If it can't, you have cycle inversion. You have price down until guess what? Boom, you have the exact breakout with the turning point. And then this side produced the rally. That's what they mean by cycle inversion. And then now, basically halfway through this cycle, we peaked. I mean, you peaked before it, but we haven't been able to make higher highs after the midway point. So that was a shorter cycle in there, which is essentially what happened is this was a nice turning point. But when you look at what happened as a purple cycle, the shorter cycle took over. So for here, then we came off, couldn't make a higher high, right? Kind of bottomed here with this cycle. But again, we just haven't, no real long-term higher highs outside of since we peaked here on this downtrend. So this is what I care about. I mean, this cycle nailed the breakout. This was a good low coming off this turning point. I think this is going to be major. December was a high. We might get another low here in December, and then hopefully there'll be a new breakout. All right, guys, hope that helps. And here, this is where we can start the Black Friday blackout, breakout, blackout, whatever. Come here to the courses. I updated all this, so 20% off the Forex course, 20% off Pi Cycle Trading Secrets. The entire proprietary institutional model. That's the full directional model, guys. Analysis, execution, risk management, energy, cycles, fractals, the entire top-down, the whole gambit's right here. So 20%. It's only $15.96. We really used to sell this for $3,500. That's a huge discount. The options course is the model plus all the option strategies I like, so it's a little bit more, but still, instead of $2,500, you're saving $500. I know some of you wanted to do options. That's a great way to do it. And then this is the best of all. You want all these courses that I've ever done. It's almost $6,000 in typically. All right. I took it down by 56%. So just the options alone, you're going to get a lot on the course, right? You're going to get the options strategies we like, plus the model. But for $500 more, guys, you get the Forex, Pi Cycle, options, the entire model, plus 3 months of the Cycle Edge membership. So that's the best I can do for you coming into the holidays. I know some of you want to do some of that. And so that's what I got for you. All right. Enjoy the rest of your Sunday. Broncos lost. That's par for the course. And not sure if they have one trying tonight. I don't know. Well, I'm gonna get out of here. I'll see some of you guys in the morning.